Hello and welcome to the Friday wrap-up presented by the Goxteen News Network. I'm your host, Landy, and today is November 7th, 2025, and we are looking at Bitcoin, of course, here. To start with, we're looking at it on the weekly. We will go ahead and take a look at on the daily because Bitcoin is getting a daily bounce off of a major weekly area that we've been watching between 98,000 and 101. Now, I did want to point out that we're at a point where Bitcoin kind of grinding it out in this area is, of course, as I've mentioned before, getting a lot of hot takes from people thinking that, this is either just the beginning, we haven't even started the bull run, or this is full on bear market mode. We are in a bear market right from here, right now. The top is in and it's all over. Now, I've presented to you the criteria and my thoughts on that. And that, that gets some people a little upset that I haven't picked a side. And I think abstaining from picking a side at this point is the right approach because we are in a very different market than we were last cycle that is evolving. So I think that it pays dividends to understand what's happening with price action and watching it carefully for possible structural breaks, which we don't have yet on higher term timeframes like the monthly. So let's look at something very important though here on the weekly. And I think for many of you that watch my content here have already looked at and pointed out and went, there's something to note here about where Bitcoin is on the weekly. And that's currently that Bitcoin is trading below the lower second standard deviation. I know that we had a nice little Friday pump off of a major area, that being this weekly right over here between 101 and 98, right? Well, if we do see it close below the lower second, we have, the etchings of expansion beginning, in this case, to the downside, right? But there is one more bit of criteria that we would need to see. We would need to see a close below this weekly right here, which is just slightly below the lower third standard deviation. This is at that 98,225 on spot to actually initiate further expansion into support. And because that would also put Bitcoin below these highs here on a close and a swing, we naturally then would be looking for expansion to the next major areas. Of course, there is a daily level right between $94,000 and $96,000, the most volume traded for this area over here. That was very important on the daily. It acted as an inflection point. You can split the difference between that 94 and 96 at right around $95,000, but realistically, the next major area to look at on the weekly in terms of structure, if Bitcoin were to drop below $98,000, which would initiate expansion on the Bollinger Bands while losing an area of support, would be to work your way from highs to lows. Well, if we're already past the highs, we look to the next major low area on a closing basis. In this case, you can see 93.5 is the close open of this higher low over here. Now, of course, remember this higher low over here was bull bait after going up and making a new all-time high, but closing lower. We did have the potential for a bear bait setup over here with the lower low. And if the 108 and 108.7 kind of close open had held, which would have been slightly over here and set a closing higher low, this would have been bear bait, but that did not work out that way, right? We're actually seeing price, of course, trade down to the next major level, but below 93.5, we get the swing low at 89, which is the high over here of a lower high. So big inflection point right around $89,000 to $90,000 there for price action. And then, of course, the close open in the mid 80s coming in at $86,000 down here. That does have to be entertained. But specifically, what's the criteria to look for? A close below the lower second, in this case, right around 104, 100. I would say if we do see price action turn green over the weekend, it's going to be a daily area that we're going to be talking about right around 104.5 that we want to see price closing above. But the criteria would be closing below essentially 104. And then seeing price action start to trade and close below on the daily that leads into the weekly below the $98,000 region. And then we can start looking to some of these further downside targets, either at this low side structure or this high side structure next. That is the actual setup for the bears. Now, what the bulls and the bears need to be aware of course, that the bears have to be aware of this bullish setup when that is a failure to close past 98, maybe even going down and hitting like daily targets in 95. It's an actual possibility, right? Or even lower on a swing, but closing back inside of 98 225 and the lower Bollinger Band, lower second standard deviation, or even within it without breaking, and then shooting right back to the top side. Why? Because this is just compression. This is not expansion yet. And when we see compression, we typically see that the top side and the bottom side will get tested. And until we get that expansion, things just bounce around between the bands. That also means for the bull setup that we have some pretty clear criteria. Get back above the basis band right here on the weekly, which is right below 114, currently coming in at 113,765, and start running the bullish half of the bands, right? And we could even potentially see new all-time highs up to the upper third. And then it's only if we got closes above the all-time high, which would put price above the upper second standard deviation, would we see true expansion on the weekly. And of course, that would be in blue sky territory. We're probably looking at deeper prices, but we would have to be aware of, the possibility that if this low holds, and of course, this low, the current low that's set right now, and more importantly, this low at 98,225 on a closing basis for the weekly, if that holds, be aware of price action to the other side if you're bearish, and that's actually what the bullish setup for the bulls would be, is to run right back to some major overhead resistances now, right at 116 on a closing basis, and on the weekly, these rejections right around 116.5. That's that big daily zone between 116 and 118 that we could track if we start to see a recovery of the low side structure over here, just above price action, and then go on to run the highs essentially. And we could even see some of our targets we've talked about before above this high at 126, right? Which I consider the 123 to 125 target. It's already been fulfilled. We got a high in there at 126. But there's another area, very important area overhead between 128 and 130, where the upper third standard deviation is. So that is something to watch for. And of course, the setup for the bulls would be close above 126. That put them above the upper second, and then start closing above the upper third around 128 to 130 to really expand targets to 138 to 140, and then eventually 148 to 150. All right, so that's the weekly setup. Let's go ahead and take a look at this weekly as it compares to our local support and resistance zones up here. And let's just zoom in, because we have dailies and weeklies on this chart, and we have fib extensions. And of course, we're going to use this to take a look at the daily. So we saw Bitcoin come down to this weekly higher low now between 101 and 98, tagging the weekly lower third standard deviation, and now pulling away from it and out of that zone. So dipping into the next major area of liquidity, right? Well, just above this major fib level at a 1272, right around 103,650, what do we have? This purple area is a daily zone. This is at 105, and we're going to take a look at that. Above there, we can start looking at the low side swing structure, at 106. But more importantly, what do we want to pay attention to? Right around 103.5 to 104, and then a safe area to close above by Sunday would be, the 104.5 to 105, or this purple zone right here, and start pushing into the low side structure where we've got stacked weeklies on a high side basis and a low side basis, right? We've got essentially where Bitcoin is now, right between these weekly closes and these high side wicks. We've got another area right here at the higher low. We've got another higher high. We've got the higher low over here, right? And then we've got close opens just above. And then, of course, we've got that major weekly level. We've got stacked weeklies all over the place here. So understand that if this bottom side is dropped, we're out of the mix of all of this, or the mess of all of these weekly highs and weekly lows on closes and swings. And that really will start to look like Bitcoin wants to run down towards those next big areas, 93.5 to 89. and possibly more, even down to that big closing area for the lower high at 86, right? That would be a possibility, but Bitcoin has not broken down yet. So if it does start to come back to the upside, you need to see it clawing back, especially this weekly area. You can essentially take the low here to the high here of the weekly area, and that would be right around 107 to 107,250, depending on your chart, to 112. And that was our initial call on the monthly at 112 before the pullback to that $98,000 area. And then, of course, we've already had the targets fulfilled to 123 to 125. The next big area to the top side would be getting through all of this weekly downside structure, the mid zone area right around 116 to 118, and then start running the high side structure towards 120, push out shorts towards 123 to 125, and then going for the all-time high and that 1414 up there by 128 to $130,000 closes above there. Guess what? That's going to very highly likely kick off a move to the upside that is going to put things, on the daily in the mid 30s with targets on the weekly up to 138 to 140. And that would start to look like a resolution to the upside in blue skies and the next major leg for Bitcoin to the upside. So it's all still on the table for the bulls and the bears. So this is really when you want to be paying attention. And let's go ahead and take a look at that daily. We see that the daily, of course, as predicted, one of the major areas that we talked about is we start losing 107. Be aware that we're likely, on the daily going to test 105 anywhere below there, the 1272 at 103.5. But realistically, what did I say? If we lose the weekly, we're going to head to the next weekly, right? Especially after tagging the 1272 at 103,650 here already. That, nice bounce up, rejection at a major area, and then losing the weeklies again, likely going to go for the next weekly, and that is now what we have seen. And the bulls have a chance here. We have only seen swings thrown into the 101 to 98, 225 here on the daily. And what would the criteria be for the bulls to set a low? Because this is a downtrend. And start to work its way back up towards the overhead resistances. Well, that's pretty simple here. We have a very clear downtrend on the daily, and it's not full trend yet, by the way. So what we've got is a higher high to a lower high and lower low, right? So what we need to see the low set to give the bulls a chance to start working its way back up towards some of those major areas and the bottom side of the overhead structure that was lost, right? Well, in this case, we need to see closes above 104.5, 104,550. And that matches or mirrors where I believe if Bitcoin does continue to the upside here on the daily, let's go ahead and change the color here. That's going to be the right where the lower second standard deviation is on the weekly, right? Because the candle is still red, but if this starts to turn green, well, it would have to get back above 110.8, sorry. But if it starts to head up towards the lower second is actually what I meant. What's going to happen is we'll see the bands ever so slightly adjust with price, right? Like when price was just a little bit lower, dipping into the 101 area, the lower second was more around 104 even. But as price rises towards the 104 area, we're going to see this lower second standard deviation more around that daily area or daily criteria to set a daily low on a close right around 104.5 to 104.6. So in this case, 104,550 splitting the difference there. That would set a daily low. And then what do we need to see from there if this is going to be something that is bullish? We set the daily low. We either see another lower high to a higher low equal low setup that can take out that lower high. That would be one scenario, right? So you set the low above 104,550, and then you take out the lower high, right? This would be, by the way, a trend reversal setup. Where would the trend reversal setup occur? Even if we get another lower high, it would be off the higher low. Right? That would be the higher low trend reversal setup. And then if we were going to see it actually do a trend break, we'd get trend reversal set up to trend break. That would be one scenario. Okay. Or we see that we break the actual last closing lower high right at 111,221. And then we would have a trend break to a higher low. And this is just an example, right? I'm just pointing out what the example would be, right? This would be a potential trend break to a higher low trend reversal setup, or equal low trend reversal setup. In this case, I drew it like as an equal low on a close or something like that. But realistically, it could be, anywhere. Maybe it looks something like that, and it's much cleaner. That would be your trend break to trend reversal. Whereas just a moment ago, I had it drawn as a a lower high to trend reversal and trend break. So the thing to look for would be either a trend break to trend reversal setup. So get above 111,221 for a higher high, which is a trend break, and then put in a higher low or equal low for a trend reversal. So trend break to trend reversal, or the other way around, which would be trend reversal to trend break, which would be our potential, for a bullish setup, which would be, lower high to higher low, which would be your trend reversal to trend break setup above the most recent lower high. That's where, the bulls have an opportunity. That's where you have to pay attention to the overhead levels. And realistically, it helps to set the low at above 104.5, 105 region. But realistically, we need to see the low side structure at 107, 107, 108, and then head to the weekly area between 109 and 112 to actually try and take this lower high out. That's really what the bulls need to pay attention to. What do the bears need to pay attention to? Well, the bears just want to see continuation from here. They want to see, any kind of setups like this, start to fail, whether it's another lower high or whether it's, sideways and down, right from here, consolidation and then continuation. That's either, setting this swing down here and then just continuing down below the low, or setting a lower high and then getting below the most recent low for continuation of trend to the downside, which would also be, in this case, daily expansion to the downside. But so far, this is just daily expansion into a big area of support. And could it kick off weekly expansion? The only time it's going to matter is on closes below that swing low on the daily and the weekly at 98,225. Very, very simple. So there's no sense in saying it's either, just beginning or it's all over. It pays to actually pay very close attention to what's going on in the daily trend as it relates to the weekly trend. And you don't have to worry, right? And then, of course, this can help you identify opportunity. What I will tell you is, many of you know that I went short at 123 after the 126 high. We had some lower term time frame rejections coming off of the high, and then the failure to push back above in lower term time frames, on the dailies, and of course on lower term time frames above and hold 123. So we kept falling into it. Changed lower term time frame trend. I went short, and I've been short since. Now I am what's called net short, because we hit that big area of interest to the downside. So let's go ahead and turn on the support and resistance areas of interest, because we have so much structure down here from the other trend and consolidation, right? I'm net short from the top side here, and of course I did start to take and refill some of that short as I was taking profits off of the main bottom side of the weeklies here, and then I was refilling in and around the 116 to 118 area. So every time it jumped above 116, I was again filling my short side of my position, and then taking profits on the bottom side and continuing to hold that short. Well, I am now starting to get into a long position on the other side of that. So off of the 101 to 98 area, I went in and I started to go long there. Now it is still a net short position, meaning that the short side is bigger than the long side. So I'm right now about 95% net short, and but I am starting to take in this area and lower. I will be building out the long side of that position. So Essentially, I'll still be keeping the net short position open, but then trimming at each level if it does continue down, and taking profits, and then adding to the long side of that position in larger sizes at key levels on the way to the downside. So still will be maintaining a net short position until I get to 50-50. And then I'll likely take profits on one side or just continue to hold, and continue to build out until that is a net long position. It really depends on what happens with structure. But I am now just net short and not short. Now, I was doing that within the range, but I went and closed all of those longs after the breakdown, and then have now started to rebuild, and will rebuild lower on the long side of that position. So that's how I'm playing price action now. It gives me room, and to be quite honest, I have a lot of room on this position. So it's very hard to push shorts out that got in at the highs. You need profit taking. You need a trend change on the daily and a recovery of those major areas. Specifically, need to see a recovery above that 116,500 or a reclaim of 116 to 118 to really start making shorts sweat. And, that's where we would see some profit taking from shorts, along with some bulls coming in to really push it back into the bottom side of this range and start getting the shifting the power, I guess, on the auction here. And it makes a lot of sense for what's happening in the global economy and, of course, in the United States economy right now as well, for what we're seeing in price action on Bitcoin as it relates to traditional markets. And maybe that's something that we'll cover on Monday. But I'm going to leave you with this. Just watch the downside on the weekly here and pay attention to the weekly close on Sunday. Now, of course, the market is going to close an hour earlier than it used to for many. So before the time change on the East Coast, the market was closing at 8 p.m. Eastern and 5 p.m. Pacific. But now the market is closing with the time change at 7 p.m. Eastern and 4 p.m. Pacific. So for those of us on the West Coast, that would be 4 p.m. on Sunday. Watch where the close is, in and around or above or below the lower second standard deviation. And, if you're on the East Coast, it would be 7 p.m. So watch that carefully as we head into next week. And, if you like this analysis and you value what I'm doing over here, please go ahead and like and share this out there with others. And I want to thank everybody for all of the support. I want to thank David Gokhshtein as well for all the shout outs and the help with the content, as this is produced by the Gokhshtein News Network. And I hope that you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. Have a great weekend. And I'll be right back here on Monday to talk you through what we observe in that Sunday close. Have a great weekend. Landy out.